What's going on, everybody? This is Lucci here with Peter Zhang, and this is the weekly mailbag that we do every Thursday where we answer questions from the audience. Don't mind all the noises. This is New York apartments and police, which may or may not be after us. But let's go ahead and showcase a couple of trades that we made today. Before we actually get into some questions, guys, if anybody wants to ask some questions, you can go ahead and throw on Twitter. You can ask on the BTFD page. Just make sure you pound Sang Lucci Mailbag, and we'll try to get to those too. All right, so let me just showcase a couple of trades that we made today, as well as some hedges. I was just writing puts today. I wrote these two in particular. Okay, so you'll see this one. I wrote this at about $1.68, right?
Yep.
Something like that. $1.50, $1.68. As you can see, she closed out here at around 20 by 65. So that was a good write.
Which actually means that it's worth nothing.
Right, which is absolutely.
We should talk about that too. What happened yesterday when fucking Goldman had no bid?
Oh, brutal. So brutal. Let me showcase this other option here too. Oh wait, that was the same one. We got another one. We have one in Google actually. So I did the 1070 put in Google. So actually same strikes on both. This one I wrote at $1.60, and as you can see, this is going to nothing. So we're holding this overnight, hopefully for max profit when these things just zero out. And of course, you guys know I am holding contracts of Goldman Sachs. All right, I'm also holding calls in Goldman Sachs. A significant chunk, actually. I have about, what do we got? Like 1,700 contracts?
Almost, yeah, 1,700 contracts.
Yeah. 1,700 contracts.
I'm not going to say which strikes. Lucci's not going to show you which strikes, so don't even worry about it. But let's go ahead and jump. Actually, real quick, yesterday, the Fed announcement.
Fed meetings, yeah.
What's really funny is that we had puts that we wanted to sell. I actually wasn't here for it, but
yeah.
apparently
Yeah, it was a hedge.
What happened is that because there's so much volatility, there was an offer for what, like 90 cents?
Yeah, so as soon as the number came out, we had a hedge with Goldman Sachs puts, specifically the 170 weekly puts. And numbers came out. I had a $1.10 bid before the minutes were released. I had a $1.10 bid. The numbers were released, or minutes, whatever, and I had a 9-cent by dollar offer.
Yeah, so it's like this is what happened. This is again another testament towards how HFT is supposed to be providing liquidity, and how you're supposed to get liquidity on a dollar-wide market, especially with a hedge. We had to take a loss on the hedge because it just took so freaking forever to find a bid to come back. Yeah. One of our friends, D-Stritty, shout out to D-Stritty, he was trading Tesla at one point that was being volatile for a day. There was no reason for it to really be that volatile, but it was. And all of a sudden his bids just disappeared. There was just nothing there. And that's kind of what David Lauer was talking about during the flash crash when like the entire market just spreads out and it just disappears. This happens every single freaking day in the options market. Yeah. And don't be shaken out because, again, it's just a mark at that point. You need to be able to manage and just know that this happens all the time. If you haven't gotten into the options market, be aware it's very different from the stock market with liquidity.
Yeah, and just so you know what happened to me on that Goldman Sachs put is I ended up losing about 40 grand on the put. And I was trying to get sells, so I had a 9-cent by $1 spread. And I'm trying to get sells at 70 cents, 60 cents, 50 cents.
Nobody fills.
Nothing. I got nothing. So I had to go 41. I had to go 30. And finally I got the fills there, and it is what it is.
It is what it is.
It's easy to panic, too, because when you're looking at you're looking at a 9-cent bid. Remember, P&L is going to reflect off what you can sell right now. So that means it's going to look like shit, when these things happen.
Next time for people that get into that scenario, all you want to do is use an exchange that is sort of semi-non-toxic for posting liquidity, which means you go on Amex or you go on SIBO and you throw out an offer that's kind of at midpoint and you just leave it there. You just leave it there, and eventually, the buyers will come back and you will get filled at those points.
Right. All right. So let's go ahead and start taking some questions here, guys. Again, if you want to get some questions in, go ahead and do the pound Lucci mailbag, and we'll go ahead and find you on Twitter. We got the first one here from Ben. Do you believe it is possible to gain an edge tape reading the SPY? If not, is this because the SPY has too much volume, or because the spread is so tight that whether transactions happen or the bid or offer has less relevance? I mean, this guy pretty much summed up the answer and the question. So we don't really tape read on the SPY. And again, with any good futures trader, especially if they do the SPX or index trader, they just have a good feel for the market. Okay, and yes, absolutely, tape reading on the SPY is very difficult. If any of you actually looked at a level 2 or tape on the SPY, you'll see transactions flying around everywhere. It's so quick, too fast, too much volume, too much stuff to filter out, really. But a good tape reader can get a really good feel for, again, supply and demand in the SPY. All right. But if you're a newbie trader starting out, I wouldn't recommend trying to read tape on the free SPY. You got anything to add on that?
There's just too much info. You have your ES futures, you got your SPYs, and then you have all the correlated ETFs, and you have everything that's supposed to relate to the SPY. And it's just too many things pulling and dragging back and forth, too many stat arbs in there. But there are some people that do it. I think that if you do it, you can maybe have an edge for maybe 5-10 minutes at most. But to try to keep on and pushing it and trying to catch the turns all the time on it, it's probably too much.
Cool. So next question. Q loves asking. He's on the advanced tip now. These days he's gotten to a point where.
Dude, he hit me up about Python.
You got it. Yeah.
Programming on
you got to talk to this dude. Anyway, Peter and Brian question. The market opens. This is a scenario. The market opens. Are you finding or seeing that cash equity prices find their levels fairly quickly, but vol levels adjust a bit more slowly? Generally, within the first 10 minutes, you get an idea of where vol is on most trades.
Yeah, so that's actually how market makers do it in options, is that they, sometimes options take an extra minute or two to even populate any bidder offers. That's because there's just the open print that's just going to splash the entire market, and then liquidity needs to come in, which is kind of fast on the cash equity side. And then overall, in general, vol is a rolling calculation, so you need a little bit of time to actually have it come out. But I would say that any vol calculator you have out there is going to be pretty wrong. In general, that's just how the street has it, how Thinkorswim has it. To have a real pure vol model, you're going to need a quant like a Mark Shaw with us to actually have a multi-million-dollar vol model that can actually give you the right vol points. But yes, in general, in the morning, first 3 to 10 minutes, you're not going to have any vol print at all, any real correlated vol amount.
All right. So FSC hit us up on Twitter. We're going to get to you in a second. Let's go ahead and take the second. Actually, let's go ahead and take D-Jack. This guy's actually D-Jack is a subscriber with us. He's been asking questions every single week. I see that you are building positions in the options for Amazon, GS, and Apple before the FOMC meeting. Are you worried that the FOMC meeting will affect the whole market in general, or could be a gap up or down the very next day? Okay, this question might have been submitted a little bit earlier before the FOMC minute actually happened. What I was doing was, yes, I was accumulating those positions to hold into the meeting because I had assumed that even if they do taper, we're still going to rally, which was the correct assumption. However, I still ended up taking a loss because my bid dropped down on everything. I couldn't get the hell out of shit. I'm looking at my P&L down 70 grand, and I freaked out. So yes, absolutely, that was the idea. The idea was to go for the gap. Not really the gap, but it was to go for the volatility that would come in after the minutes came. All right. So Randy's saying, so what happens to all the lotto money spent on Bank of America OTM calls and puts where somebody is buying thousands of these during the week and the strike is never hit? I know they expire worthless, but does the market maker get to keep this money, or where does it go? Well, Randy, it really depends on who you are in the picture here.
Are you the seller or are you the buyer? You know, that's usually the question you need to ask. And most of the time, when you see thousands of prints on the out-of-the-money options, that's a bunch of dumbasses that are buying them, market makers making money on them, or it's just market makers against market makers that are selling, and then they're hedging out with the stock. So when you think about the money, you also have to realize that the advanced players are spread all across the strikes and also in the stock too. So when somebody sells 100,000 contracts over 20 different strikes, they could hedge 1 million to 2 million shares, and then they're all good. It doesn't make any difference to them. That's the name of the game for options for giant players.
Right, and Randy, you got to think who's doing the lottos. I mean, who's on the losing side of those lottos? Most retail are the ones that are doing the lottos. You know, they're the ones that are buying way out of the money strikes because they look at the penny options and they're like, oh my god, I could buy this at 2 and it could go to 10. You know, so most of those people, you already know who those are. Anyway, they're getting burned completely.
Hopefully, also be a spread.
True, absolutely. Hopefully, those people that are just going long those calls or puts on whatever it is, lottos, hopefully they're doing it with money that they can waste, you know, that they're just kind of throwing it out there. Hopefully they're doing it like that. But obviously we know better, and these people are freaking idiots. All right, so Alvaro here, he's got a question. Do you guys also read options level 2 or just the stock tape and level 2? Absolutely, okay? My order execution on every single one of my options happens to be in options level 2. So I am sitting here reading bid and ask on every single one of the options that I'm trading. I don't read tape on my option though, okay? So I'm not actually looking at time and sales on my option. I'm just looking at my level 2, all right? And then I can clearly see the volume up here. What is it, right up here? Where is it? 10, yeah, right here. Yeah, so I can clearly see the volume right here, going up or going down. But yeah, again, I'm looking at bid and ask all day on my particular option and how it's responding to moves in the equity.
And then you also look for paper. Sometimes on Fridays you'll see ginormous paper out of nowhere that likes to just screw around all the time.
Right, so what Peter is saying by paper, woo, guys, I'm getting sick here before I'm about to go to Morocco. Ain't that some shit? Anyway, so when traders say paper, what they mean is a large buyer or seller, okay, of that particular option. So let's say you're taking a look at this option, you see somebody coming in for, let's say, 200-300 contracts at 30 cents. That's considered paper. We call that paper. All right, just some trader lingo there for you. All right, what else we got? We got FCS trays. Well, that one just got added on there. Follow up to Ben's questions. What are your thoughts on super slow tape, e.g. banks today like Goldman Sachs or Chop days? This is great. This is great, people.
You just don't stare at it forever.
You can't.
You have to give yourself a lot of leeway because tape is also about what Lucci calls the ebb and flow. Not getting too much into the details about it and just giving you kind of like a little hint of what we talked about in the classes. On some chop days, you cannot be buying at all, even though it's a relatively bullish chop. And reading the tape there involves much more about just understanding, the levels of your stock and also the in general bid or in general selling pressure that's available in your stock on that particular day.
Absolutely, absolutely. So yeah, I mean, just to add on to what he's saying, I mean, the whole day today, we're looking at this Goldman Sachs position. I'm up 50 grand, I'm down 50 grand, I'm flat on the day, I'm up 25 grand, I'm down 25 grand. You sit there and look at it too much, you're going to make some shitty decisions. Trust me on that one. Okay? Chop will force you to do some crazy things that you didn't intend to do. All right? And by the way, coincidentally, most traders, they lose all their money during chop periods. They lose all their money during the choppy periods. All right? So last question here. We got a big tape question here that we got on the email. Chris here is asking, I'm still trying to understand this tape thing. So for every buyer, there is a seller, right? Tell me how you interpret this, And there's a whole picture here that he threw out here. So let me see if you guys can go ahead and actually see this.
Oh, nice. Yeah, they can. Wow.
Okay, so what we're looking at here is a example here of a time in sales, okay? So in the attached picture, C1218, 13.4, it looks like down here. First, and tell me what you think happened at 9:54. Then see the next one, and then tell me what you think happened, okay? So, I mean, I wish we had detail on what actually happened.
954 up here.
So 9:54 up here. One contract went off for the 700.
It looks like one contract at 954 was mid-market, one contract was on the bid, and then 5 contract was mid-market. That's all I can see from that. Unless yellow means it was on the offer.
Right. So guys, time and sales is coded, color-coded for where the print goes off. So if the print goes off, when I say print, I mean that transaction goes off on the bid or on the offer, it's going to come out in a different color.
It's midpoint because he's got a green one here. So it looks like overall midpoint and sell pressure, and then boom, there is one buyer that looked like a really stupid buy, and then it was midpoint, midpoint, sell, 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 midpoint. It looks like, I don't know. It just looks like selling and midpoint trading.
There you go. And again, like, you know, to speak to Chris's point here, tape reading is not about looking at a transaction and saying, oh my God, did somebody buy there, or oh my God, did somebody sell there? That's not what tape reading is. And again, this is something that we teach to all of our students, you know, through painstaking efforts on actual level 2 and time and sales. And you're not looking at whether there were buyers or sellers. What you're looking at is where the print came off. You know, you're looking at trying to gauge supply and demand. That's essentially what
it's about context, guys. You cannot just do a snapshot and be like, this is what happened. You need to have context at all times. You know, the markets are relatively continuous, so you can't just be like, oh, there's a seller now, so it's just sell pressure. You need to say, what is the relativity and what is the context, and, you know, is it repeating? How does it repeat? Is it more stuff on the bid, on the offer? It's a combination of a bunch of stuff, and a lot of people just don't. They complicate it with the idea of who's buying and selling. You should be more concerned about where's the price of your stock, and where is it in relation to 5 minutes ago, and how did it get there? You know, and where is that relative to your leading ETF or something like that? You know?
Right. And as you can see, the professor just joined us. What did you go on a run? Is that what you did?
Charlie's doing deadlifts and squats.
Oh, so you're doing big things, big boy stuff.
I got a big ski trip, man. I gotta get in shape. That's what I'm saying.
That's right.
Turn my ankle up. He'd love that.
Okay, so we got some questions here coming in on the BTFD homepage. Is the Sang Lucci team taking some time off between now and mid-January? If how long are we?
We don't really take time off. You're gonna take time off because you'll be in Morocco.
Yeah, I gotta go.
We'll take Christmas off.
Yeah, we'll take Christmas off, of course.
Yeah, we're gonna have some specials though. Say that much.
All right, yeah. So we do have some specials here for
Might want to check
some
out
of the classes,
tomorrow.
some of the classes and everything.
Yep.
So make sure you check those out. I'm going to Morocco tomorrow, and I will be back on the 30th.
SARS? Are you gonna make it? What's going on?
Do I sound that bad right now?
You sound pretty bad.
You might not make it on the air.
Yeah, dude. I might just quarantine you.
God damn.
Gotta drink that rum. Help you out.
All right. Anyways, I'm going, and I'll be back on the 30th. All right, and then we're throwing a big New Year's party here.
Z-Pack, he's right.
Z-Pack. What is the Z-Pack?
Z-Pack's like an antibiotic, just like napalm. It's just like
Only-
kills everything.
Lucci doesn't believe in.
Lucci doesn't believe in medications or anything. He just believes in alcohol, guys.
Only
Makes sense.
white people know about Z-Packs. Okay, ask any brown person what a Z-Pack is, please, and then tell me what happened. And then tell me what happens.
Oh my God.
Of course, most doctors are.
I was gonna say, how many doctors are brown in this country now? All of them.
But they all have diabetes. Anyways, so any strategies for 2014 should interest, inflation both rise? This could happen anytime. That's the problem. I mean, this could happen anytime. If interest rates do rise, absolutely. Financials, again, is your clear play. I'm trying to play that right now. I am trying to play that right now. Just with the, just with what happened with the Fed and that's really it. So yes, absolutely, financials. I think beginning of the year we continue the rally, but I do think there's going to be a major pullback, which I want to make ridiculous sums of money on, and it's hard to make sure I don't get in too early, because that'll be the most dangerous thing for everybody here.
For our livelihoods.
All right, I think that's about it here. Charlie, you want to add anything before we go?
No, guys. I mean, I think we'll be on Tuesday, but we'll obviously let everybody know. Hope you guys check out the site. We're gonna have a lot of cool specials for Christmas and stuff. And happy holidays to everybody, man.
All right, guys. Take care.
See you guys.
I'll see you in the new year.